Bloomberg Audio Studios.
Podcasts, radio, news.
It really does all come down to the consumer and what the appetite there is. And we want to really focus on the U.S. consumer. Bank of America releasing its final consumer checkpoint report of the year, saying there were no signs of consumer resilience waning in November. President of Retail Banking Holly O'Neill writing, spending momentum carried across all income cohorts through the gap between higher, middle, and lower income household. Spending growth is narrowing. Holly joins us now. Holly, wonderful to see you. Thank you for being with us.
Good morning.
Good morning. How much power is there left in bank accounts, in desire, in some of the spending trends that you're seeing right now?
Well, as you said, the consumer resilience is not waning. So across all of the metrics that we look at, they look really healthy. And the dry powder is there. So when you look at the money they have in their checking and savings accounts, it's still significantly higher than it was even pre-pandemic. Now, we've seen that come down, but it's still higher, so they still have some cushion in there across all income cohorts, high, middle, low. And in particular, the low income cohorts look even stronger when you look at it on a percentage basis. So from a liquidity perspective, they look strong. From a borrowing perspective, they also look strong. So they're borrowing in and around the same levels that they were pre-pandemic. When you look at our credit card data, so that looks good. They still have borrowing capacity. The credit environment from a bank perspective is fairly normalized. So I think the resilience of the consumer looks strong, and their spending also looks good. And we're obviously in the peak spending period of the year. So their spending looks good. Their spending was up in November. And that matches our data of our surveys that we take pre-holiday. What are you expecting to spend during the holidays? So
well, the reason why I find this so interesting, first of all, is because this has been what has driven U.S. exceptionalism and is the envy of a lot of other countries, but also runs counter to what we're hearing from the guidance of certain retail companies in particular. How do you square that?
Well, I think that the consumer, you do have difference in sentiment versus actual behavior. So we look at the actual behavior of the consumer. What are they spending? What are they spending on? So as I said, spending is up. Holiday period, it's also up. They're expecting to spend $2,100 this holiday period. That's up 7%. So, within that, we're seeing trades to more discount stores. So they're looking to stretch their dollar a little bit more. And they're seeing the benefit of some lowering prices. So in gas, as an example. So in gas, we're seeing a higher number of transactions, but the dollar amount is lower because the prices have come down. So they're making trades within their spending behavior, and they're really making their dollar go further.
How do you distinguish the sort of trading down whole scenario? How do you say that's stretching the dollar versus this is weakness and this is something that might show some cracks?
I think in my opinion, it's the consumer making good choices with the money they have to spend. They're very informed because the overall spending number is higher year over year. But then within that, they're making trades and adjustments. At the same time, their liquidity levels are still strong and they still have borrowing capacity. So all of those things working together, I think, are showing a good, strong, resilient consumer.
The trend has also been this spend on services, airline spending still robust, cruises still robust. Yeah. Do you see that continuing on, or could we have any sort of rotation back into good spending?
I think you could see that rotation. As you all know, during the pandemic, people really upped the ante on the durable goods, the washers, the dryers. We still haven't seen that come back because those have a long shelf life. So I think as you see that mature, you could see it shift back. But the spending patterns really remain fairly consistent. Travel, experiences, services, those are very strong. We are seeing in this holiday spend, we are seeing electronics come back a little bit. So that's also, a beginning trend, I would say.
Speaking of the holiday season, a lot of retail analysts have come on and said they're really focused on the fact that there's 5 less shopping days because it's a shrunk, basically, holiday season between Thanksgiving and Christmas. Do you see that having any impact at all on consumers willing to spend?
No. I think overall the consumer is going to spend for the holidays. It is a more truncated period, but we adjust for that when we look at the behaviors. So for the 2 weeks around Thanksgiving, and it was late this year, right? I think it's as late as it can get. We did see that spend go up. And so I think it's just going to be a more truncated period.
What would you be looking for if you see any cracks of this resilience?
I would look to their spending patterns first. Again, borrowing we will always look at as a bank, but the borrowing behaviors are still really strong. They're still paying credit cards off at a pace that's faster than it was pre-pandemic. That's a really good sign. And then the liquidity in their checking and their savings accounts. And, I think we've seen that really kind of flatten a little bit. And as we get into 2025, I would expect to see that start to grow again.
I'm trying to build on what Amaru is talking about. There seems to be a disconnect, and please help us with this. Because on one hand, in this survey, you talk about the gap between the wealthiest and lower income cohorts narrowing actually marginally. Mm-hmm. You talk about a robust firepower in their bank accounts. You talk about ability and willingness to borrow. And then you talk about looking to stretch their dollar. This kind of behavior that you typically see on the brink of something that does feel like, to Dani's point, a weakening. So what gives? Why aren't people spending more in a traditional and free-willing way when the data seems to suggest they'd be in a position to do so?
I think that we've seen a permanent shift in what the consumer wants as a liquidity position in their account. Right? So I think they got used to that during the pandemic, saying, I have more cushion in my bank account and I'm going to keep that there. And then they're making the trades into lower cost goods to make sure they keep that and maintain that level. So, I think that's one of the trends. But I think it's the consumer who is very educated, very aware. There are deals everywhere. They're in social media. We know that 30% of our clients are planning to buy in social media this year, which is very interesting. And so I think they're very aware and very informed and making choices.
Is that the same thing as price fatigue? Because we've heard that a lot among companies, that their margins, they can't keep expanding it because there's fears that people aren't willing to pay up. Is that the same a different side of the same coin?
I think it could be, yes. And I think, it's consumers, again, making very informed choices and taking control for themselves as to where they can spend their money, where they can budget.
Holly O'Neill of Bank of America, thank you. This was really, really interesting. Holly O'Neill there with us.